Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update, and we're going to be kicking this update off by getting into some of the main news, or one of the main news sort of headlines at the moment, and that is that Goldman Sachs lending investor group are set to essentially buy Celsius's assets. So there's been lots of misinformation about this already. I think some people think that Goldman Sachs are going to be buying Celsius, whereas the source that these articles essentially derived from really is suggesting that it's the assets that are getting bought, not Celsius itself. And we do see Celsius actually up off of its lows, even today, a whopping 930%. So I'm not sure why the Celsius token is pumping, because it only really states that Goldman Sachs are buying the assets. But this is actually, in terms of crypto, in terms of adoption, very much what we're going to see a lot more of. We're going to see institutions use this opportunity as a buying opportunity for cheap crypto across the board. And Goldman Sachs are leading that. We're seeing continuous involvement with the institutional sector, or the institutional traditional financial sector, and the cryptocurrency market. And this is just another step in the right direction. So we're going to kick the video off really by reading this article, or certainly some of it. Some really interesting things revealed actually in this article about Celsius itself, like the fact that they had raised $750 million from investors last year, including Canada's second largest pension fund. So pension funds were actually invested in Celsius. I mean, that is not a good look at all. And this space, I think at this point, really does need regulating. I know that sounds quite contradictory to Satoshi's vision, but in terms of crypto as an asset class, for that next wave of adoption, particularly institutional, we really need to see regulatory clarity around this new and exciting asset class. And that's what it is, guys. And this is just another kind of confirming factor that that's the direction this is heading in. Realistically, crypto, given everything that's happened, if it was just a nothing burger, would have disappeared by now. The Goldman Sachs lending investor group to buy Celsius assets. Sources: the Wall Street firm is seeking $2 billion in commitments for investors to buy distressed assets at steep discounts in the crypto lending goes bankrupt. Goldman Sachs is looking to raise $2 billion from investors to buy up distressed assets from troubled crypto lender Celsius, according to two people familiar with the matter. So Goldman Sachs hasn't actually came out and said this themselves. These typically tend to be rather accurate. The proposed deal would allow investors to buy up Celsius's assets at potentially big discounts in the event of bankruptcy filing. At the same time as them saying this, they're basically saying if Celsius files for bankruptcy, it is extremely likely, given the fact that Citigroup and Akin Gump have both recommended that Celsius do indeed file for bankruptcy. There's not really much way back for Celsius, which from a trader's point of view actually has me looking at the Celsius token, which did wick all the way down to around about 8 cents, and at one point was all the way back at $1.50. I mean, that's a huge return. Is that just off the back of false reportings? I mean, Goldman Sachs aren't actually set to buy Celsius, which the Cell token, of course, is extremely linked to. So why is the token pumping? I don't really understand that, but it may be a short that I look to take. Certainly on the fact that you've got a real declining volume here, but you did have a huge spike in volume, kind of showing you that people were already well aware of this news all the way back on the 13th of June. We're now on the 25th. I'll read on. Goldman Sachs appears to be gauging interest and soliciting commitments from Web3 crypto funds specializing in distressed assets and traditional financial institutions with ample cash on hand. According to a person familiar with the situation, the assets, most likely cryptocurrencies, have to be sold on the cheap, would then likely be managed by participants in the fundraising push. So the participants being Goldman Sachs and the investing group, or group of investors that will be with them on this venture. We're going to see more and more institutions hold crypto. We already know that BlackRock, which is this is still huge news that hasn't really sunk in. BlackRock is the largest custodian, or the largest, institution in the world, 8 point something trillion in terms of value. They are the main custodian of USDC, which is the largest stable coin, or the second largest, I should say, to Tether stable coin in the entire crypto space. So institutions are here, and they are going to what's essentially happening right now is the market is selling off. Obviously, we know all the financial conditions. We will talk about that a little bit later on in the video because we've got quite a bit of news to get through after we've spoken about this. But essentially, when prices are attractive enough, we're going to see institutions step in. And you're going to really see that in terms of volume and a volume shift, or some sort of a volume spike that's going to really indicate that. But right now, very quickly whilst we're on the chart, in terms of this pump, extremely unimpressive. And we won't use the hourly, we use the daily. Extremely unimpressive. This move is on low volume, which means there's low interest in this move. It's not a very strong move. We still bias on this channel that there's more downside for the cryptocurrency market. I think when you look at the traditional world of finance, it's in a whole different world of trouble. Things are sort of, very fragile across the board. And that's with the Fed setting out more tightening for markets when things are getting kind of tight as they are. So we still think there's more downside. Back to this article, however, Celsius has tapped, basically saying that they've been advised. Goldman Sachs did not respond to the comment, so this isn't actually Goldman Sachs official. Celsius had more than 8 billion lent out to clients and 12 billion in assets under management as of May this year, abruptly announced on June the 12th that it would stop withdrawals from its platform, citing extreme market conditions. The disclosure exacerbated those conditions, briefly sending Bitcoin's price below 20k. So you do have the likes of Citigroup and, of course, Anakin Gump talking and recommending that Celsius do go bankrupt, probably because they're going to be involved in actually taking on Celsius's bankrupt assets. It is very interesting that Celsius actually got money or raised money, and one of the investors was Canada's second largest pension fund. I mean, that is really not a good look by any stretch of the imagination. And Celsius, of course, has done very well on this. Well before any of this news, you can see a huge volume spike here. That indicates that something, a trend reversal, at least on the short term, or a short-term low was going to take place here. But you've had huge follow through. So maybe this is a short that we look to take. Not short at the moment. Have to figure out what platform to actually short it on, because I know that quite a lot of platforms actually delisted Celsius. But in terms of, the volume for this is really running out. And also, Goldman Sachs haven't actually said that they're buying Celsius as a company or as a crypto sort of product. That it's more the assets that they're going for, meaning that Celsius would essentially lose everything. So I don't know why the token's up. But anyway, so Bitcoin, again, we just briefly touched on it. You guys should all know by now, if you watch my content daily, that we still think there's more downside for the cryptocurrency market. The volume's telling us that as well. This is not, yes, you have a huge spike in volume here, but it's to the downside. You have a lot more volume on the downside than you do. And when you do get these up legs, it's on extremely weak volume. And this is declining volume, really showing that the trend is somewhat running out of steam. You need to see a real uptick in this, in the right direction, for this to keep going. But there is still the scope. We spoke about the upside risk for the equity market. We'll use the NASDAQ. Get rid of this. When you look at the weekly, you're right around your 200 weekly moving average. We have been saying consistently that this is your upside risk here, that you're here. You typically react to this, but it's my opinion that you will then eventually fall through this and see lower lows in a kind of recessionary manner, if you will. Let's move on to a little bit more news. FTX may be planning to purchase a stake in BlockFi. FTX, I have said that, Sam Bankman, this is a real power move and a monopolizing move for him as one of the sort of victors of the chaos that's going on at the moment. And certainly he's bailing out other crypto firms that are in trouble. This gives him huge vantage over them. So I think it's a real power move by him. This is from Waves, not a token that I'm particularly familiar with. I do know they had a pretty epic run, or was it Leo that had the run? But Waves has done quite well from time to time. But Waves founder holding $50 million debt to avoid USDN depeg. What could go wrong holding debt in a declining market, you know? And certainly when it's to do with holding a USDN. So for me, you know, looking for shorts, Celsius, fundamental reasons potentially, and Waves. But of course, technicals are going to have to really match up with that before we do take those trades. But potentially, these could be too short ideas for anybody looking to investigate further. Bitcoin network power demand falls to 10.65 GW as hash rate sees a 14% drop. Been saying for a while now, you know, we looked at miner profitability, that miners were going to become more and more of the story. You know, some miners actually held on to their Bitcoin. They wouldn't just sell it. They'd maybe sell what they needed and hold on to the rest. That's not an option for them now because their profitability has been seriously slashed given the Bitcoin price and, of course, the rising prices for energy. So this is a story. Miners is going to be something that I actually paying close attention to. They're going to become a huge sell pressure now, I think, because every time they mine, they're going to have to sell. They don't have the option of holding on because they've got bills to pay. JP Morgan, Bank of America, and Citigroup may need to cut buybacks after Fed stress test results. This is what I mean about a very fragile system. There was also something I retweeted on Twitter talking about how much derivatives have actually ended up spiking on certain banks' balance sheets just over a very small period of time, you know, a matter of, 6 months. And that really shows that there's very unordinary things happening in the financial world. And this is all risk for crypto, I think, given just how tethered to the financial landscape it is and has been. Austria, Germany, Italy, and the Netherlands announced plans this week to prepare to resurrect old coal plants. So we've spoken about how the sort of chokehold that this issue that's going on over there, or certainly with Ukraine and Russia, is causing for the, certainly Europe. Germany's a big one in terms of energy supply. It's a huge pivot. Europe, which is, very sort of green friendly, they're actually going, right, we are in trouble now. We're going to have to turn back and actually open up old coal plants, basically, which is a huge shift. One that I'm sure even a couple of years ago or a year ago, people wouldn't have thought would be the case. But that's the kind of situation they're in, and it shows the severity of it. This all has impacts on markets, guys. And this is what we're looking out for. This is another reason we're very much biased more downside. It doesn't have to be that manic, but certainly, looking at 15K, and then we'll deal with what happens here. Do we get that huge volume spike and a real shift, or do we get some sort of a moderate volume spike and then lowering volume on potentially a rally? That would probably spell more downside, certainly if the macro conditions haven't shifted. That is all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated, so is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gents.